Hello and welcome to the weekly edition of the video market update from Orbex.com. We had a very exciting week last week actually with many economic releases and events, in addition of course to the key event this weekend on Sunday, which was the French elections, and finally we say here that the public polls were right. Macron is now the president of France and the election challenge is now behind us. However, if we look at the market reaction, and you might be questioning for the time being that why the markets are down in Europe and why the euro even declined since the beginning of the day. Well, we already also talked about this last week. Also, we warned everyone in our previous reports and the previous videos not to overreact to the second round of the election. Why? Because the market has already priced in Macron's success when he made it to the second round during the first round of the election, and the euro back then went up by more than 2% in one day, while equities in Europe added between 2 to 3% right after the announcement. The question now, where do we go from here? And as I said before, the election risk is already now behind us, and now we have to concentrate on the upcoming fundamentals and upcoming catalysts, in addition to the latest also fundamentals, especially those from the US. Last week, the US jobs report came in better than expected overall. However, the US dollar declined across the board on Friday, leading the euro even to reach almost a 1 spot 10. The reason behind such decline in the US dollar is due to the year-over-year wages growth. We're not talking about the month-over-month, we're talking about the year-over-year wages growth, or the average hourly earnings on a year-over-year, which basically slowed down for the second month in a row, posting the lowest level in almost a year, despite the fact that the estimates were to rise even to 2.7, but it went all the way down to 2.5%. With no wages growth, this means that inflation might not even rise to the Federal Reserve's target, which is the 2%. In return, the Fed might hold off on raising rates if needed anytime soon. However, you need to be very careful at the same time, because the Fed fund futures are pricing in 100% chance the Federal Reserve will raise rates in June, which means that traders also likely to price in such a thing in advance, meaning that the US dollar also might be very close to another bounce ahead. Earlier this morning, we saw the US dollar also jump by almost 0.5%, and might even continue, especially that there are only few economic releases this week. In addition to that, don't forget that the euro still has a gap around 107, which should be also filled sooner or later. So this is one of the things that I wanted to talk about at the beginning of this video. And now let's have a look at our technical charts and where we might go from here. Beginning with the US dollar index as always, and at the beginning of Monday, actually, we had a clear recovery from its this trend line shown on the chart, the one that we also use it as a neckline of the previous head and shoulders formation, or head and shoulder pattern, which basically failed also to continue. However, this basically continues to show that there's some sort of a momentum to the upside at the beginning of the week, especially after the technical indicators are crossed over to the upside after being heavily oversold since almost mid-April of this year. And right now we might be actually on the way to retest the 200-day moving average, which is 99 on 21. But at the same time, I still believe there's more room to the upside ahead, especially first of all to cover the gap that occurred right after the French elections, and probably to retest the 50 and the 100-day, or especially 100-day moving average, which is around like 127. But before that, we have the 100 resistance area here that we have also to keep an eye on. But the general outlook remains bearish as long as the dollar index continues to trade below the trend line of this year, or below the previous top, which is basically we're talking about April stop around the 101.30s. Looking into the euro dollar, so far we haven't actually filled the gap that occurred right after the first round of the French elections. But at the same time, we have a trend line that basically the top of August and the top of September, it was actually here, and it actually consolidated for almost like 2 weeks. And on a Thursday of last week, we had this sharp rally all the way back up, and then tried to retest also that level, but at the same time it failed. But on Monday we had this decline all the way back to 109 areas. But this is basically after the French election round 2, which is already priced in. So that's why we have seen this correction for the time being. But since the technical indicators are heavily overbought for the past like almost 2 weeks, if not even more, and at the same time, the stochastic the RSI is right now pointing lower. I'll still be interested for another dip lower or another leg lower again, at least toward 108.50. But I would love to see another even leg lower toward 107.27 or 107.26 is basically Friday close on 21st of April, right before the French election, the first French election, to cover the gap before the trend continues. Otherwise, I'll be staying away from the euro for a while. Looking into the other technical charts, including the Kiwi actually last week made only very slight gains after like 1 week of a notable decline all the way from 71 all the way back to 68, 70s, and which is basically remains very solid, especially that it's around the 100-week moving average. At the same time, technical indicators are heavily oversold, which basically opens the way for another bounce ahead as long as it continues to trade above the 68, 70s on the weekly chart. That's basically still positive. But at the same time, on the longer term, a very tight range between the 70 and the 68 is likely to continue until further notice and until a new catalyst from New Zealand. The Aussie made it also very clear. It tried to break above the 50-week moving average last week, as we noticed that we had to keep a clear eye on, keep a very careful eye on that resistance, and it continues all the way back down, testing its 100-week moving average and closed above it. So we're still in a very tight range. This week we began the week lower below the moving average, which basically opens the way for further declines ahead. But at the same time, we had the Fibonacci retracement is now at the same level, which is 61.8. This is why I'll be looking for another bounce from here. But any breakdown below that resistance, below that support, would open the way towards 73.30, which would be a target for this week, just for a dip buy. At the same time, technical indicators has a little bit more room for more downside ahead before the upside or before any bounce. Looking into the dollar yen, which continues to trade within the same area, the same levels that we talked about, at the 50-day moving average held for almost 3 days, and then last week at the beginning of the week we had a break above that resistance and continued all the way back up. Today we had this also one green day, which is a 100-day moving average that should be watched very carefully over the next few days, because a continuous break above that level would open the way for further gains ahead. But I still believe that this might not actually happen for the time being, because the technical indicators are also heavily overbought, and I'll be looking for at least another leg lower, despite the fact that the dollar index is expected to go higher today or during the next few days. The British pound continues also to trade within a very flag on the daily chart, but still breaking above higher, and also it was almost shy at 130 last week. It actually closed all the way, or the high of last week, it was 29.81, but at the same time closed the week on the high. Yet we had the first red day after 2 days of consecutive gains. But at the same time, I still believe that the British pound has a little bit more room to the upside, maybe 130. I don't think that we will see any more rally above that resistance before the breakdown continues, especially that the Brexit negotiation will be even tougher right now with France, or with Macron is the president of France. Finally, let's talk about gold and silver. Gold has broken below its yearly trend line, or this year trend line. However, I still have faith in gold for this year due to the geopolitical situation and the risk also involved in the market, especially in the equity market, and oil at the same time. So, despite the fact that we broke through the trend line, the 100-day moving average is another level to keep an eye on, which is 1220, 1221. At the same time, for me at least, from fundamentals and technical point of view, as long as it stays above this year's low, it is still actually a possibility for another leg higher, all the way back to 1289. Of course, after actually reaching all of our targets on the downside, when we also warned about a possible retracement. Finally, silver has a different story, because silver is always outperforming gold when it goes down. That's why we broke through a lot of technical key resistance, key support area. But at the same time, I would keep the bullish outlook unchanged for the time being, as long as it stays above the 1580 and the 1520s, which is this year's low. Before I would change the outlook from from bullish into neutral. At the same time, technical indicators are heavily overbought and they're flat, so that's why I'll still believe there might be a potential for another rally from the current levels, which is 1629, maybe to retest at least the 1683 over the next few days. So this is the technical outlook for this week. So this is it for today. Thank you again for watching today's video, and don't forget also to register to our upcoming webinars this month. We have many webinars in Arabic and English, and you will find the link below for the webinars below the video. If you have also any questions, you can leave it below the video on YouTube, and I will try to answer it as soon as possible. Finally, please like and share this video if you think that it's informative and it's good for you at least. And thank you for watching, and I'll see you once again next week. Have a good one.